Yo, breakout strategies. Drawing that support line, then the resistance line, and waiting for that epic moment when price smashes through. When it breaks hard. But how do you nail this strategy without getting burned? Are there tricks to make it work? You bet there are. Let's dive right in. Ever been here? You set your support and resistance lines. Hype for a breakout. Price blasts past resistance. You jump into a trade, grab your snacks, and glue your eyes to the screen, expecting a moonshot. But then, wham! Price flips, tanks, and your portfolio is in red. Total buzzkill. I'm gonna share a secret to dodge this trap. First, what the breakout? It's when price is bouncing between solid support and resistance levels with multiple rejections at each. The breakout hits when price punches through one of those levels, often rocketing afterwards. That breakout point? Prime entry spot. But how do you find setups ripe for your breakout? Breakout patterns are the key. You've probably seen these: wedges, flags, rectangles, triangles, pennants, etc. Here's the deal. Do not obsess over price mimicking the textbook pattern perfectly. It rarely does. Focus on the support and resistance levels that form the pattern, not the exact shape. Honestly, the pattern's name doesn't even matter. What they all share is price consolidating between two key levels before busting out. Say you spot price action with multiple support and resistance touches. More touches, better setups. Draw your lines, maybe forming a rectangle. So far so good. But here's where most traders trip up. Lots of folks just wait for any breakout and jump in the second price crosses resistance. Big mistake. That could be a fake out and price reverses, leaving them with a loss. Let's fix that with a smarter approach using momentum candles. These are either one fat candle with a big body or three medium candles all moving the same way. Check this example. We've got higher highs setting a resistance level and a support level with multiple reversals. Price forms a decent candle breaking resistance, but only the wick crosses, not enough body. So it's not a momentum candle. If another green candle had followed outside the line, we'd count it, but a red candle shows up instead. Ignore it? False breakout dodged. Another example. Set support and resistance. Price breaks resistance with a candle, but it's too small. A second candle is also tiny. We need a big-bodied candle or three green ones, or let's say it's three white soldiers. Then a third green candle pops up, bullish as heck. That's your entry. Three things that could happen. Price keeps climbing, pulls back to resistance and bounces, or crashes through resistance for a breakout. So wait for a pullback or enter now. I say enter at the momentum candle's close, setting a stop loss just below resistance. If price pulls back and bounces, you're stop safe, and you're still in. If it rockets up, you're already riding it. Momentum candles make fake outs less likely, but the stop is there just in case. For exits, breakouts can run far, so a standard 1.5 to 1 take profit cuts you short. Instead, use my two-step take profit system. Enter on the momentum candle, stop below resistance, set take profit at 1.5 times to 1, when price hit it, sell half your position to lock in gains. Move your stop to the take profit level. Then use the chandelier stop indicator for the rest. Add on TradingView, search chandelier stop. Set the ATR multiplier to 2 in settings. Send the other half when chandelier changes color. This nets you extra profit, way more than dumping everything at 1.5 to 1. Plus, many breakout skips pullbacks, so entering early catches those runners. One more example, hotkey support resistance levels. Draw lines, wait for a momentum candle. One break resistance but lacks body, so wait. Two more green candles appear, 3 total, so enter. Stop below resistance, take profit at 1.5 to 1. Sell half at take profit, move a stop to that level, and chandelier stop. And exit the rest when it changes color. These tricks make breakouts way sharper. All I ask, drop a quick like on this video. Want to know what I think is one of the slickest buy-sell indicators on TradingView? It's the twin range filter, hands down. I'm going to show you how to pair it with other tools and some price action tricks to build a trading strategy that can seriously stack some profits. First, we need to set up our indicators. For this example, I'm pulling up the 5-minute chart for CAD against CHF. But here's the cool part. This strategy works on any asset and any time frame. To add the twin range filter, click the indicators tab, search for twin range filter and add this one by this amazing author. Big shout out to them. And pop it onto your chart. This indicator blends two range filters to smooth out signals, giving you a sharper edge over basic ATR setups. To tweak it, go to the settings. On the inputs tab, set the fast period to 27, fast range to 2, slow period to 55, and slow range to 3. Then hit OK, and you're set. The indicator is super simple. It flashes a long signal for buying and a short signal for selling. But here's a catch. Relying on those signals alone is a fast track to tanking your account. To make this a winning strategy, we're adding 2 more indicators. But don't be afraid. I know that you might be scratching your head and telling yourself, I cannot use more than just 2 indicators on the free plan of TradingView. I know 99% of you are on the free plan. Believe me, I do know that. But don't go anywhere, because just before the end of this tutorial, I'm going to show you some TradingView hacks which you can add up to even 30, 40, 60 indicators on the free plan. Stick around until the end. Search for G-channel trend detection, and we need this one. Then grab the What Are the Explosion V2 by this amazing author. Big shout out to both of them. For the What Are the Explosion, double click to open settings. On the Inputs tab, adjust the sensitivity to 100, fast EMA length to 25, and slow EMA length to 50. In the Style tab, drop the opacity for color 0 to 0%, and crank color 1 to 100% for both uptrends and downtrends. The red downtrend color was a bit intense, so I dialed it back to 50% opacity. And switch the explosion and dead zone lines to white for clarity. Now hit OK. For the G-channel trend detection, the default settings works fine. Just turn off the show cross option and save. Now, you're probably wondering how these 3 indicators team up for long and short trades. The What Are the Explosion is a momentum indicator. A green histogram shows bullish momentum, and of course, red shows bearish. When the histogram crosses above the white explosion line, it signals the market's buzzing with activity. Perfect for jumping into trades. The G-channel trend detection, as the name suggests, spots trends. A green trend cloud means a bullish market, and guess what? Red means bearish. For a long trade, here's the playbook. First, confirm a bullish trend with a green trend ribbon on the G-channel indicator. Second, wait for a long signal from the twin range filter to mark your entry candle. Third, check the What Are the Explosion. Make sure the histogram bar for that candle is green and closes above both the dead zone and explosion lines, showing a strong bullish momentum. Finally, add some price action. Look for a resistance level the price has broken and retested. Draw a rectangle from the high to the low of the resistance candle and extend it right. The price should touch this level multiple times without the closing below it. If it closes below, the setup is invalid. If it holds, enter a long position. Set your stop loss below the recent swing low and aim for a take profit at 1.5 times your risk. I've seen this setup nail profits. Here's another example. A green trend ribbon confirmed the bullish market. A long signal popped up, and the water explosion showed a green histogram bar above the explosion line. The price broke and retested the resistance level, marked by a rectangle. No candles closed below, so I entered a long trade. Set a stop loss below the swing low and take profit at 1.5 times the risk. Guess what? It paid off. For short trades, flip the script. Confirm a bearish trend with a red G channel ribbon and the price trading below it. Wait for a short signal from the twin range filter. Check that the water explosion's histogram bar is red and above the explosion and dead zone lines. Then find the support level the price has broken and retested. Draw a rectangle from the low to high of the support candle and extend it. The price should retest without closing above. Enter a short trade, set a stop loss above the recent swing high, and target 1.5 times the risk. I tested this and hit take profits. To wrap up, this strategy combines the twin range filters signal with G-channel trend detection and water explosions momentum, plus break and retest price action to turn a risky indicator into a profitable system. Backtest it fully to see how it performs long-term before adding it to your toolkit. Oh, as I promised you earlier, you can watch the recommended videos on your screen and check them out. These are different approaches which I showed you previously how to use more than just 2 indicators on the free plan of TradingView, and believe me, you will come back to me and thank me for them. Plus one more video which is amazing. If you found this valuable, smash that like button or subscribe for more. Catch you next time.